Hi everyone, it's Liam McMahon or Duke0777 on Twitter. Um, I wanted to do a quick video, show you a strategy that I've been working on. It's not even a strategy is a far too grandiose name for what I'm talking about. Just a trade idea that works pretty well, provides a very nice risk reward and a very clear trading setup that you can find all over the markets. I'm not the first person to come up with this. This is by no means novel, but it did just play out very well recently, and I wanted to show you what it was, and hopefully it'll help you a little bit in your trading. Please take a moment, do me a favor, read the risk disclaimer that I have up. Basically just states everything I'm going to say is for educational purposes and that you are in charge of your own risk management, and don't, you know, you know what it says. So if you need a second, please pause the recording and read it. And then real quick, I'm going to just show you a trade that worked well, that worked well last night, and hopefully you can apply that strategy to different trades. All right, so this is the hourly chart of Aussie dollar. I posted a video a while ago saying, I posted it yesterday. It was our chart of the day where I talked about how I'm really looking for an Aussie dollar rally. We got that rally. And now I want to talk about a very specific hourly trade strategy that you can use. It works on all pairs. It works on equities. Obviously, it doesn't always work, but it provides a very nice risk to reward and very clear setup and very clear targets. All right, so here we have Aussie dollar hourly. We're going to start here at the bottom. You're not doing anything. This isn't a bottom catching strategy. All right, so we see this rally higher. We break above this previous bounce level, I guess. All right, so here's some previous resistance. It held, we broke above it. All right, so now I'm interested in longs because we did clear this resistance area. So now what I'm going to do is I'm going to draw a simple Fibonacci retracement from the lows to the highs. All right, so I see a pullback here. And what I'm looking for is a move down towards the 50% fib. We got it. We wicked below it a couple times. It held. The strategy is basically the strategy is exactly take a long at the 50% fib. I usually front run it by 5 pips just in case, with a stop below the 618% fib. So in this case, the long would have been 94.50 or so. Call it 94.50 with a stop of 94.10. So a 40 pip stop. That's about average. All right. So then you try to get long here. It worked out well. You would get to break even when we got above this 38.2% fib right here at 94.71. All right, and then here's how we find the target. All right, so we're going to get rid of that extension or that retracement, and now we're going to draw an extension. All right, so here we have basically the classic measured move is this. Oops, hold on. Is this 100% extension? It's basically just the measured move of a bull flag. That's another example of this. Anything along those lines, all right? It's just a very simple measured move where basically this third wave higher is equidistant to the first wave. So from the 50%, we came up, we tagged this 100. You would take profits, again, front run it by maybe 5 pips, and you basically would have ended up with, let's say I said 94.50, 96.66. So, you know, pretty solid 210 pip trade higher. All right, so that is basically the strategy. Look for 50% fibs to enter long. Your target is this 100% extension. Get to break even on a break higher and kind of go from there. Stops below that original 618% fib. All right, in this case, it offered a almost 4-to-1 risk-reward ratio. All right, so that's, or maybe even better than that. So that's basically what you're keeping your eye out for in the markets. I hope that's helpful. It's an interesting technique that you can use to find some quick and easy trades with a good risk to reward ratio. As always, if you have any questions, you can find me on Twitter at Duke0777, and you can find me, as always, at the globalfxclub.com chat rooms. Feel free to come visit us there. All right, enjoy the rest of your trading week, and I'll talk to you guys later.